Good morning, welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And for this edition, we're going to be looking at tailwinds in international markets. And joining me is Safa Muhtaseb. He's the portfolio manager over at ClearBridge Investments. Thank you, as always, for joining us at MarketSite. There's a lot to talk about here. You see a lot of strength in international equities. Where in particular and what sectors do you see strength?
Jill, thanks for having me again. So non-U.S. markets have actually outperformed the U.S. Year to date. The best performing market has been emerging markets, followed by Asia ex-Japan, and then Europe, followed by Japan and the U.S. in that order. What's driven this outperformance? Very attractive valuation starting point, continued improvement in global economic growth, very accommodative dovish central banks. Bond yields have continued to behave, and this improved macroeconomic backdrop has led to an improvement in profitability. And within it, we're beginning to see an accentuated bifurcation within these markets. So if you look at what has been the best performing sector on a global basis, by far it's been IT technology, followed by materials and industrials. Even then, the outperformance of tech is very vast relative to the market. So if you look today at the 10 largest companies in the world by market cap, 8 of which are tech or technology companies, 5 are US, 2 are Chinese, and 1 Korean. And then if you take the market cap of those 8, it is about a third of the next 92 companies on a global basis. So we're seeing a bit of a bifurcation. Net, we continue to think the markets will continue to do well into 2018 as this profit growth likely to continue given this macroeconomic backdrop, given leading economic indicators, and inflation continues to behave on a global basis.
All right, in a recent commentary that you mentioned that there could be a profound and generational shift in the investment landscape. Could you tell us more about that?
So that's precisely what we're discussing, is that we're seeing this valuation dispersion within markets because markets have been so skewed and crowded to this tech trade, the Apples, the Googles in the US, and then the Tencents and the Baidus and the Babas and the Samsungs outside the US. We're seeing a big differential in valuation of these companies versus the rest of the market, like financials, like materials companies, and we're likely to see a reversal of sorts, going forward, particularly as these flows maybe begin to start to slow down a bit.
So you're looking for the value outside of tech, and financial could be one of those areas in the international market. Materials could be another one in the international market. But let's talk about international value ESG investing, because it's such a popular strategy right now. And what kind of companies do you look for on the international landscape, and what can it do for the economies that they serve overall?
So ESG is integrated into our investment approach, into our investment philosophy, if you will. And Europe, in particular, as a region, is significantly ahead of the rest of the world on such fronts. So what we're looking for are those companies with sustainable revenues, profitability, and that goes hand in hand with having a respect for environmental impact, for multi-constituents, so on and so forth. And as more and more investors around the world embrace this approach, we think that subset of the market is likely to get rewarded.
Okay, well, thank you very much for joining us at MarketSite. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.